Hi, this is Michael Waits recording live from the Singapore FinTech Festival 2024. Thank you for joining us for this special edition of Insurance for the New Possible, where we discussed the most innovative ideas in FinTech. We are joined today by Pratyush Prasanna, MD and Group CEO at Flip. Thank you so much for joining us today at the Singapore FinTech Festival 2024. It's awesome to have you here. How are you doing today?
I'm doing great. Thank you so much for inviting me. It's a pleasure to be here. And thanks again for inviting. Looking forward to talking to you.
It's my complete pleasure. I've been looking forward to this as well. So give us a quick introduction for people that may not know to Flip. And then after that, I want to go to a definition. But let's get what Flip is first.
So Flip is, it's the largest P2P payments company in Indonesia.
Nice.
By P2P payments, we mean you send money to someone else who's a consumer like yourself. So we enable people to send money to their friends, family, vendors, etc. And primarily in Indonesia, right? We also have a mission, which is to enable fair financial services for everyone.
I like it.
And
let's define. Can we define that though? So I really did want to ask you this, because I think this is actually a trend. I think this is actually a secular change is taking place in the way financial products are delivered. And again, just to give you context and the audience context, I worked at Morgan Stanley and Goldman Sachs for 20-something years. Mm-hmm. That was one delivery mechanism. I think this is a different delivery mechanism. And what you're saying is fair financial products. Mm-hmm. What does that mean?
So financial services, as with most services, typically start with the top of the pyramid, right?
Right.
But that doesn't mean that there is no need for similar services for bottom of the pyramid as you go down, right? Indonesia, for example, where we are based, is a hugely unbanked country.
Right.
But at the same time, it doesn't preclude the need for banking services for everyone.
And also 18,000 islands, so hard to access some of these people too.
Absolutely.
In a traditional way.
Absolutely. I mean, it's not like a contiguous like mainland US or even India, right?
Right.
Where it is very difficult to provide on-ground services with the traditional methods, right? So how do we do that for our users? Because the need exists.
It's there.
So that's one part. The need is one part. The second is the cost of itself, right? Cost of the service itself. Now, traditionally, of course, the cost of financial services has been higher. And there is a tax that people pay for providing financial services, right? Like, for example, whenever you buy something at a store, there is a 2 to 3% that everybody else in the process charges, right? It might not be viable for people who are, so to say, bottom of the pyramid to actually pay that. So we aim to provide that at a fair cost, but at the same time, without compromising on the quality of that service.
So how does this exactly work? And you make a really good point. And if you don't mind, I want to add on to it. I think it's not just on the consumer side. You also have the business side that has to pay these types of fees as well.
Absolutely.
So how do you work together technologically with the service providers, but also the service consumers for using technology to make sure that those types of issues can get resolved?
I think two of the words that you said are important, right? One is working together, and the second is technology.
Go ahead.
Technology, as we know, makes things a lot more efficient. So we use technology to a very large extent in terms of providing the scale that enables people to access these services, right? And the second one is that because of our scale, we go back to these service providers and say that, hey, why are you charging me, let us say, 100 rupiah for this service and why not 20? Because then, I can pass it on to our end consumers.
We can bring you 5 times more customers.
Exactly. And we can bring you 5 times more customers or maybe 10 times more customers.
Exactly.
Doubling your revenue, but at the same time, providing it to a lot more people, right? So that's what we do. I'll give you one example.
Please.
The cost of transferring money, if I were to transfer money to you in Indonesia, is about 7,000 to 8,000 rupiah, which is half a dollar. If you go by the traditional methods.
7,000 to 8,000 rupiah.
Rupiah, which is half a dollar, right? Now, in half a dollar, in most cities in Indonesia, you can actually buy lunch.
Right.
Which is obviously not very affordable. I mean, the half a dollar is not very affordable for normal people.
Right.
We make it zero. How do we make it zero? Because we go to the bank and say that, you know what? We will do all the transfers will be intra-bank. We are not going to do outside the bank at all.
Right.
Bank is like, okay, it's
all
mine.
the money's going to move right through here.
Correct.
Right.
And then we pass on that same benefit to the users, right? So that makes it easier.
So almost more important than access itself, right? Because everybody can have access. In Indonesia, there are what? 270, 280 million people. So alone, it's a massive market. But more than access, which is great, is actually getting people to use it. And educating them about how it works, why it works that way, and that free actually means free. How do you go about the financial literacy side on top of the financial inclusion side?
Now that is a problem that is a moving target.
Sure, for sure. There's no one fits all solution.
Correct.
But I'm curious about the mindset more around it than anything else.
Correct. I think actually that's a much more relevant question because the one I said are things that we control very easily,
Absolutely.
which is technology and talking to partners, right? But education is something that is, as I said, it's a goal that becomes getting bigger and bigger in a bad way, in a sense that you need to educate more and more people, and the more down the chain you go, the more difficult it becomes, right? So we are trying our bit in terms of educating our customers in order to know about these financial services and then use them.
Use them, right?
Correct. And then use them, right? So, for example, people don't see the value. Generally speaking, humans don't see the value when you tell them that, hey, this is what the value is.
Right.
You first tell them what the need is.
Right.
So that's what we do, where people use our P2P payment system very regularly. But we tell them that, hey, you know what? You paid your insurance bill through this, right? Then said, why should I pay insurance? We said, okay, you paid your taxes through this. We know that you have one wife and 2 kids. You might want to ensure that something happens to you, they get paid, right? We know that you,
coverage, protection matters. Sorry, go ahead.
We know that you paid your cell phone bill last month through us. Why don't you insure your phone for breakage, right? Just as an example, right? So that's how you educate them, that create that need, which they might not know about, and then fulfill that particular need.
Do you find that because you mentioned a bunch of different scenarios, right? Not just making a payment itself.
Yeah.
Do you find that, and I used to say when I was much younger, that we're both smiling, so that makes me feel better. But I used to say when I was much younger that you can't learn how to drive a car by reading the manual. You've got to get behind the wheel, drive in snow, and figure out what it feels like to actually use the brake and the accelerator. And I feel like it's the same way with financial service products. Do you feel like once they get into the payment ecosystem, they think, if I press this other button, I can pay for my insurance. If I do this other thing, I can pay my phone bill. I can get coverage. Are you seeing that type of activity?
Absolutely. I think a lot of the education, as you said, then you can't read the manual and learn driving, right? You have to put your foot on the pedal.
Yeah.
So what we do is that we encourage users, especially through nudges, that, hey, you might actually need this. It's okay if you don't take it, but you might actually need this, right? You might actually want to do this because you have a family. We know that you have a family because you paid your taxes, right? We know that you have a house because you paid your house bills, right? Your electricity bills, right? So you might want to do this. So nudges are actually very important because subconsciously, even if they don't do it this week, they might do it next week.
Yeah.
So it's quite important to do that. The other point that you mentioned, which is that education is a continuous process. It's not like one shot, right?
No.
So we try to make it such that financial literacy, because we actually go in 3 phases. One is regular usage, which is payments, which everybody does, right? The second one is scenarios like insurance, etc., right, which people understand. And the third one, which is more progressive, is investments, because now that you have done this, do you actually have money that you want to save for a rainy day, right? So we move them in that particular journey, also kind of creating value for the user.
So I think even people that are financially sophisticated need nudges.
Everyone needs nudges.
I definitely do. I got nudged yesterday to pay my electricity bill while I was here, and I did it digitally. For your own business, you mentioned to me actually when we were prepping, right, that Flip feels like it's kind of redefining what success looks like. And this, you explained, is like a meaningful customer experience. Why is that so important?
We cannot,
you know what I mean? As opposed to just driving, like, we're just going to drive for profit only. How do you feel like those two things work together?
I always think that profit is an outcome. If you do the right things, profits will come, right?
Yeah, for sure.
I also, I'm a strong believer in the fact that you should not run a company for investors or for, what is cool in the industry. You should run it for your customers.
Yeah.
Right? All our so-called OKRs or whatever our, product and engineering and other teams strive for is all customer-based. Why? Because if you build the right customer products, you will get money at some point of time, right? But if you're building something which is the hype, right? Or, something that is the flavor of the season, you're still trying to find that product market fit. Now, coming back, I think what we're trying to do at Flip is that we're trying to explore those horizons in terms of what are the core customer needs that we are satisfying and how are we doing it, which is why we split it according to customer onboarding, which is how easy is it to onboard customers. Right. We split it to customer payment experience, which is what users use us for. And then we go into money management, which is insurance, investments, savings bank account, etc. So it's all customer needs rather than product.
How do you create a feedback loop with your customers so you can actually understand what they really want, right? Because you said this, those product development has to be customer centric and customer driven. You can create really cool stuff. But again, getting back to this real life usage we talked about before, if they're not using it, it doesn't matter. How do you get that feedback?
So we build a lot of automated feedback mechanisms, like we see what is your journey in the app, etc. We also have, we also collect feedback from users when they get back to us, right? Which is typically disgruntled users, right? But that's great feedback. Always good feedback. Always good feedback, right? Always good in the sense, always actionable feedback, because you need to listen to what users are complaining about. Because if one user complains, there are 90 others who are not complaining.
Yeah.
Right? So we are very good in terms of collecting feedback, to the extent that our NPS is almost 80, which is like Tesla. So
that's really high, actually.
Thank you. Customers love it. Customers love our product. It's not that they don't give us feedback.
Sure.
Like, for example...
But you can have a high net promoter score and still be getting feedback, right?
Yeah. True. So we are very militant about customer feedback.
I like it.
To the extent that, our largest team is actually our customer support team, right? Which most people don't look at nowadays. In fact, in this age of cost cutting, most people cut that team first, right?
Right.
But we are very particular that our customer service cannot be, we can't compromise on it, right? Like, for example, we started our business with domestic remittances, right? Like, if I transfer money to you in Indonesia, right? A lot of customers said that, hey, if I can transfer money to Michael in Indonesia, why can't I transfer it to Richard in Singapore?
So cross-border payments make a difference, right?
Correct.
Please go ahead.
From a customer point of view, it is like, I'm just transferring money.
It's no different.
It's
it
my
doesn't
money.
feel any
Why
different. It's mine. I can send it anywhere. That should be easy, right?
Correct. But from a company point of view, it's like, oh, now we have to start cross-border payments.
Right.
But that's okay, because customers asked for it.
Right.
And first of all, they were comfortable enough to share that feedback with us. And secondly, it was like really relevant feedback, because that's a real need that exists.
So you talked about customer journeys earlier, right? And this is a really good example of this. Let's say I'm 20-something years old and I start a business. The remittances that I'm making are going to be small and gradually get bigger. You can see this happening, right? But then once I open up myself to cross-border, I entered two new domains, right? One is my business is probably growing much faster. So the financial products that I need are different, but also now I run FX risk.
Right.
So how do you understand like what the customer needs are as they grow like that and as they increase the domains in which they operate?
That's actually a very good question, because all customers are not the same, right?
Exactly.
But we need to kind of bucketize customers in order to understand their life stage and journey, right? So we do that. We do, we obviously segregate B2B and consumers, but even for consumers, we have like 22 different profiles.
22.
Yes. Not only on like age, sex, and demographics.
For sure.
But in terms of behavior, in terms of spends, in terms of, how they even navigate our app, etc. Right? And that helps us kind of customize products and position them to the right particular kind of customer. Similarly, on B2B, we have a customer life cycle in terms of whether you're online, offline, omnichannel. Again, I think about 15 odd profiles, where the targeting of products is much more clear about what you really want to do and which stage of the journey are you at.
So I asked somebody this earlier, but I'm curious about your opinion on this too. How do you balance this idea of customization, which is really important, right? Like I log on, let's say I'm running a decent sized business. I need this feature, whether it's cross-border payments or some other feature that I really need. There must be another cohort out there that needs the same thing.
Correct.
But also balance that with keeping the platform stable enough so that your more standard users don't lose the functionality when they need it the most.
That's actually, again, a very good point, because I think in today's age of retargeting and customization,
sure,
the holy grail is that everything is customized for Pratyush or Michael, right?
Right.
I am actually not a big believer in that. I am a big believer in serendipity, though, which is people discovering new things which they don't know about, right? Which is not necessarily customization, right? Customization is like if you buy shoes, you just get shoes.
It can still feel like it, though. It can still feel like
you
it, right?
feel special,
yeah.
But it's not like targeting
just
the same
for Michael,
thing to you.
Yeah.
Correct,
yeah.
Right? So we do a mix of both. I don't think we do 100% of what I would like to do yet, but the idea is that we do a mix of both, which is that, again, on your life cycle, whether you're a business or a customer, we do specifically suggest products for you. Like if you have paid your electricity bill, we will suggest the home insurance or other stuff to you, right? But at the same time, we make sure that you also discover other things which are in the pipeline which you will never otherwise look at, right?
Right.
Like, for example, if you know that you've paid for a plane ticket, right? We will most probably encourage you to or enable you to do cross-border transfers, because if you're flying out of Jakarta, most probably you'll be flying to some
Singapore
other place, right? Singapore
or wherever, Vietnam, it doesn't matter, right?
Or even if your roaming data is like on, right?
I wish I could get more help with that. Please go ahead.
So we do serendipity plus customization, and not only customization.
Right. So one of the things you said earlier was this idea of fair financial products, and part of the fairness ethos, right, is to help improve lives. As you go about growing Flip, which is still a relatively young company, right?
Yeah.
Are you seeing the lives of not just your consumers, but the businesses also change? And what is that like for you as a firm?
We fundamentally believe in this fair financial services
For sure.
dictum, right? The reason for that is that if you grow the businesses from when they were really small, they will stick around with you.
Exactly.
Not because of loyalty, because of the constant value that they see you bringing to the table, right?
Absolutely.
Loyalty, of course, in business is a very vacuous term, right? You need to earn it. But at the same time, trust is much more important there.
I want to get to trust in a second, but talk about loyalty first.
So, okay. So, but we build that loyalty by giving them constant value that they think that they're getting from us, right? And this value doesn't only have to be monetary or, it is more like...
Could be educational.
Correct. It could be educational.
Could be advisory.
Could be discovery. Discovery is also a big aspect of that.
For sure.
It could even be as simple as the fact that you're enabling them to do their work better. Like, for example, for many of for merchants, right, we help them file their taxes easier, right?
Yeah.
Which is typically not what a payment company would do. Why would they do that, right?
But again, something that people don't want to do, but should be simple to do.
Correct.
Should not be complicated.
Correct.
Please go ahead.
So, so that is why I think this constant focus on what value are we bringing to the user or to the customer or to the merchant is built into the way that we do work, right? Rather than just like roll out products without thinking about it.
One of the things you mentioned earlier was this word hype, and this idea of trying to stay away from the hype and just the reality, right? How can we provide better services to our consumers and to our businesses? How is it possible, with all the noise that's going on, hype this, hype that, to keep the team itself from saying, we need to implement this thing that really maybe adds no value, but everybody else is doing and says it's cool?
I mean, we do the usual stuff of evaluating what is the TAM, how users are using it. Is there anybody else across the world who's doing it?
Right.
But for me, those are all basic homework that has to be done, right? Yeah. I think a lot of it is also going by your gut feel in terms of what is actually relevant for the users. One of the tricks that I typically use is saying no straight off.
Just right
if
away.
Somebody comes with an idea that, hey, we should build these,
right.
shoes with wheels. I was like, no,
we
are not going to build
right,
it.
We're not involved
Tell
in that.
me why. Because it forces people to think more about how to do this better.
Right.
And, humans are similar everywhere, right?
Right.
So they will come back with more detailed suggestions that, we will build shoes where there is ice, just as an example. But the idea is that once you say no a few times, people will come back and come back to you with a better product.
Right.
But that's more philosophy. In terms of actual detailing, what we typically do is that we have kind of three metrics. One is, does this make economic sense? Or number one, right? Second, is it actually fair? Right? Because we can actually charge. There are multiple examples in which lending companies have charged up to 100% rate of interest.
Right.
We do not want to be in that game, right?
Not involved.
Yeah.
Not involved.
And the third one is that how involved is this? Like, you could solve world hunger, great problem to solve.
Right.
Fair for sure. But can we do it?
Right.
So that's kind of the three metrics that we look at.
Okay. The last thing is this. How does a digital first platform go about, using a word you talked about a few moments ago, building trust? Right? Because if it's face-to-face, it's just, I wouldn't say easy, but it feels easier. How do you do it in digital form?
It is actually very difficult to build trust in a digital form when you're not facing someone, right? Which is why if you see the traditional banks have a lot more trust with their users than what the digibanks have, right?
Right.
The digibanks have a lot of optimizations in terms of doing their process,
lower
not
cost
having
as well,
branches,
sure,
call centers which are elsewhere. But the trust is something that is to be built overall. But I think a trust is a function of a few things. One is experience.
Mm-hmm.
So we try to make sure that the experience is great for our users. We also have I don't know if people have used our app, but we also have a ticker in our app which keeps on saying that, hey, you have saved this much by being on Flip. So that is also a good way to tell our users that we help you save money.
Right. There's value here.
There is value here. And this is not cashbacks, or this is not...
Right. It's just like if you'd done this another way, it would have cost you more.
If you had just done the same thing another way,
right,
it would have cost you money, or it would have cost you a little bit more, right? But that builds a little bit of trust because people see that it is happening, that the ticker is moving, right? And the third one is also increasing the touch points, which is not only just transfers, payments, which is also a very frequent touch point, but you're doing so many things with us and we have never failed you.
Right. It's always gone well.
Correct. So for example, in all of our transactions, right, all of them, we have a money back guarantee, which is if it doesn't happen, let's say you're doing an international transfer, if it doesn't happen in 12 hours, we will give you some money back, right, out of that. We will assure that it's going to happen. We're not going to take that money away from you, but we'll give you some money back, right?
Awesome.
So that even forces us internally to be honest.
Right. And to be better. That's great. Right. I really want to thank you for doing this. Pratyush Prasanna, MD and Group CEO at Flip. Thank you for spending so much time with us. I really appreciate it. Thank you.
Thank you for inviting me.